What's the meaning of bank rate? Bank rate. Bank rate.
Bank rate. Bank rate. Bank rate refers to the interest rate at which a central bank lends money to commercial banks. When a central bank wants to increase the money supply in the economy, it will lower the bank rate, making it cheaper for commercial banks to borrow money. This encourages banks to lend more money to consumers and businesses, promoting economic growth. On the other hand, if a central bank wants to decrease the money supply, it will raise the bank rate, making it more expensive for commercial banks to borrow money. This reduces lending and spending, helping to control inflation. Therefore, the bank rate is an important tool for central banks to manage the economy.